Hi, welcome to this session about GST impact on service sector. I am Chandan Goyal, founder and CEO of Blue Consulting Private Limited, which is an expert in managing tax compliances of companies at a pan-India level. We are a strong team of 110 people, and in the last 12 years, we have worked with more than 100 reputed and professionally managed companies in India. So, let me give you a little brief about how this session will go. So this is the index of the today's session. Initially, we'll cover the introduction. Then we'll move towards the unique provisions of GST, and the in the last, which is the most important, the impact areas of GST on a service company. So in the introduction, what you can expect from this session. So my promise is that by the end of this session, you would be aware about what are the possible impact of GST on a service company so that you are better prepared and implement the GST in your company on a proactive basis. So for the sake of easiness and we can take an example and some assumptions for this particular session. So we are assuming that the company which we are going to talk about, we can name it as ABC Limited, which is providing IT consulting services in 10 states of India, and it has offices in all of these 10 states. And it is charging service tax, not any other indirect tax, and all of its clients are based in India only. So now we move to the next part of our session, which is unique provisions of GST. So it will, once we discuss about the unique provisions of GST, it will help you to understand the impact very well. And in the unique provisions, there are three sub part of this session. One is that we'll talk about some important features of GST. Then what are the major difference of GST with the service tax, and then how GST will work. So when we talk about the important features, though you are aware about because GST is going on from last almost 2 years. So important things you would already be aware, but just being on a safer side so that all the people are aware about it. I am just repeating them. So all the major indirect tax are being merged into this single tax which we are naming as GST. All the important indirect tax which are excise, VAT and service tax will be part of GST. The GST will be having a federal structure where the center and state will have a say in collection in the administration of the indirect tax, which was not there. So far, it was separate. The goods were being managed by the state and the service were being managed by the center, except the excise duty on the manufacturing, which was also in the domain of center. In the GST, the one of the very important feature is that the taxability event would be on a supply. So they have kind of the term which were earlier in the indirect tax like manufacturing, sale or providing service. So these will we need to unlearn these terms. So there'll be no word like manufacturing, sale or providing service. It will be only the supply of goods or services. So that is what the very important part. And the most fundamental change with the GST will be that this GST is a destination based tax. So far, the majority of our indirect taxes are based on origin based principle or production based principle. So what happens, the goods which are manufactured in a particular state, they get the share of the excise duty, or though the excise duty is with the center. So in case of service tax and excise duty, it may not be matter of concern because earlier it was only with the center. But in case of VAT, it is very completely, you can understand, origin based. And when the state from where the goods are being sold, they were getting the share of the VAT tax. Now in case of GST, it will be destination based tax and the consumption based tax. The state or the state where the goods or services are being consumed or where it is being provided, that state would be getting the share of the GST. Now, the major difference with service tax, the GST and the service tax, in this table, if you look at, we have very well captured all major five differences. So the number one is that registration and administration. In case of service tax, it is centralized And in GST, because of the federal nature of this indirect tax, it will be in each state. So for example, in the current scenario, this ABC Limited is having 10 the operations in 10 states. So it needs to take registration in each of these 10 states. So far it was the centralized register. Second major difference with the existing service tax regime is that period of filing the tax return. So far, a taxpayer is only required to file two returns in a year on a half yearly basis. But in GST, the returns are going to be on a monthly basis. Presently, as I mentioned, the number of tax returns in a year are only two returns, which is on a half yearly basis. But in GST regime, there would be three returns per month and one return on an annual basis. So, which makes it to 37 returns, and that would be per state. Then the input credit of taxes paid on goods in the current regime are not available against the service tax output liability, but in the GST, the input credit of the taxes which is being paid on goods would be available even for a service provider. Then the concept of input service distribution is really not important if the company has taken a centralized registration in the current regime. But in case of GST, it would be very significant because the if a company like ABC Limited is having offices in 10 states, so in one state it might be having its head office or a corporate office where it would be receiving a lot of services on a centralized basis, which it need to allocate to the respective state. So there the input service distribution will be very important. So in this case in GST it would be required for service provider as well. So now we'll discuss about how this GST will work on a broader level. So the first important aspect is that in the GST scenario, the whole spectrum will be managed, the whole in IT infrastructure will be managed by a private limited company named GSTN. And the portal would be having the address www.gstn.gov.in. So all the taxpayer need to make an online registration on this portal based on the prescribed documents. Then, when the transition will happen and the GST date is announced, considering as of now we are taking that 1st July 2017, GST will be implemented. So the taxpayer need to upload all the existing input credit which is there by till the 30th June 2017. So that will become an input credit under GST regime. Then on the 1st July 2017, the invoices which are need to be rolled out will contain the specified information which will be prescribed under GST. Though the draft rules are about invoices are already there. Then the return work will start. And as I shared earlier that in GST there will be three monthly returns each month. So the first return is GSTR1, which is a output supply. So all the output services you have provided, all the invoices you have raised to your clients. So that in GSTR1 you will have those details and it needs to be filed by 10th of the next month. GSTR2. GSTR2 is a input supply return and that needs to be filed by 15th of the next month. So the vendors from whom you have taken the input services for which you are eligible for the input credit, they will be filing their output service return, which is GSTR1. That will get reflected in your GSTR2. So you just need to verify whether all the services which you have taken on which input is available is being reflecting in your GSTR2, which you are eligible to adjust against your output liability. Then at the within 20th of the next month, you need to file your monthly return, which is GSTR3. It is nothing more than the net impact of the GSTR1 and 2, which will reflect your the monthly liability, which you need to deposit by this date. And that GST liability need to be deposited by 20th of next month, by or before this GSTR3. And the last, in the GST, there is a concept of annual return where the taxpayer also need to file their profit and loss account, the detail of that, because as we shared that this GST is a federal based, that state and center both are having share in the taxation collection and the administration. So this GSTR annual return will be in GSTR 8 and it will be filed by 31st December from the end of the financial year. As I shared earlier that all the interaction will be taking place on GSTN portal. So GSTN will work as a wall between a taxpayer and the tax officer, and all the interaction will happen through GSTN portal only. And in case of return, no physical copy is required, because right now in case of VAT in certain states, even after filing your online copy, you are required to file your physical copy deposit with the local office of the tax officer. This will not be required under GST framework. So now we come to the most important part of this session, which is impact areas on a service company. Here we are taking the example of ABC Limited. So in this session, we are going to cover 10 most important areas where GST will have a certain impact. So the first one is compliance. Then we'll talk about the impact on invoicing, then input credit. Then we'll touch upon ISD. Then one of the major impact would be on agreements with the clients and the vendors. Then accounting will also have a major impact. Then we'll understand how cash flow will be impacted. The training and IT system will be covered. And at last, we'll also cover about the penal provisions under GST. So how it will have an impact as compared to the the current regime. So let's start with our first impact, which is compliances, which is the most important one. Under GST, the compliances is expected to increase manifold because of the federal structure of the taxation, and it is a joint venture of a center in the state. So looking at the current scenario, where in a case of a service company only two tax returns are filed, even in case of centralization, even if it has a pan-India presence, but in case of GST there will be 37 tax returns per year per state. So in case of ABC Limited, it is going to be 370 returns, which is huge as compared to two returns. So there is no comparison as such. So the compliance work is going to be huge, and it needs to require additional manpower and additional effort. Further, in case of GST, there is no concept of revision of return. So any adjustment you need to carry out, that would be carried out in the return, where by that time you have find out the differences, and the adjustment need to carried out in that current return itself. So the company needs to be very, very careful while filing their GST return. The second impact would be on invoicing. Currently, all the service company which are having a centralized registrations are raising the invoices on a consolidated basis to their clients. But now the invoicing will be done state-wise. So the invoicing work is going to be impacted, and company need to be prepared for that. Then we come to the impact which is going to be on input credit. So right now the input credit, how it works, that in a company, for example in case of ABC Limited, there is only one bucket where the input is taken and it is adjusted against the output service tax liability. But in case of GST, there will be three buckets of input credit, because it is a federal structure. So there will be CGST, which is central GST, SGST, which is state GST. So CGST and SGST will be in case of intra-state sale, and in case of interstate sale, it will be IGST, integrated GST. So there will be three buckets the company need to maintain, and these buckets need to be maintained state-wise. So if we look at ABC Limited, which is having operation in 10 states, so it will be having 30 such buckets, or 30 ledger accounts in which it needs to maintain the track of input credit of GST. So considering this, a comprehensive reconciliation system needs to be put in place so that there are no surprises. Then we come to the input service distribution. As I shared earlier also, that ISD concept is not relevant in the present case, but in the GST scenario it may require, because the head office need to allocate the input credit which is being received on some common services, which can be allocated to the states. Now we come to the impact on agreements. So the agreements with the clients and the vendors would require certain modifications. And the modifications can be in the form of that they can agree that payment of GST to the vendor will be made once the credit is reflecting in your GSTR2. So that you are kind of not at a risk if your vendor does not deposit the service tax. Similarly, your client will also expect the same arrangement from you. And the rating system can also be incorporated because in GST there is a very unique provision called a rating system compliance rating of the taxpayer. So you might say in your agreement that the vendor with whom you are negotiating or working with, that your rating should never fall below a threshold limit. If it falls below that, then either you will terminate the agreement or you will reduce the agreed rates of a service or the goods. Then the impact on cash flow also need to be checked. Right now, there is a stat currently because of the centralized nature, there is no planning required because all the input which are being received on input services can be consumed against the or adjusted against the output service tax liability. But in case of GST, the state-wise tax planning would be required to avoid any kind of underutilization of input credit, because there can be a case where in case of one state the output liability is less and the input is more. So right now when we are going into the transition phase, the company need to work out that what is the state wise it is expected to have input liability and the output liability, and if there is a mismatch then it can correct that through a tax planning. Then we come to the major area which is going to be accounting. Right now, the ABC Limited gets more than almost 6 months before filing of the service tax return. But in GST, it is going to be a monthly affair. So ABC Limited need to close its books of account on a monthly basis. And further, the accounting work is going to increase because it will be a state-wise accounting. So right now there was no such requirement because it was a consolidated pool, centralized basis, but now it will be a state-wise accounting. Further, the accounting will get complicated because the return will capture, in case of B2B transactions, invoice-wise detail needs to be given. Though in case of B2C, below rupees 2,50,000, this detail may not be required. But in case of all the B2B invoices, the return will capture the invoice-wise detail, and it can only be given in the return once it is captured while doing the accounting. So, how to address that? The company need to put in place a very robust reconciliation system so that all the income bills and expense bills are accounted for state-wise. And it will also help in filing the tax returns as well. The impact on IT system will be major because this in GST it is envisaged or it is expected that IT system will play a pivotal role, and all these reconciliation, the three returns per month is not possible or not easy to file unless we have a robust IT system in place. So the proactive planning will be required. That company need to understand what kind of IT system it has and what kind of modification it would be required. And they need to engage their service provider beforehand so that they are prepared when the GST is launched or implemented. The training will again play a very important role because once people are trained, then they'll be better equipped to handle the GST provisions, and it needs to be provided to the people across all the states. And I understand that ROI of training will be much better if it is done on a repeated basis, especially in the first year of GST implementation. So now we come close to the last provision, the last impact area of GST, which is the penal provisions. The penalty under service tax, as you are aware, the general penalty is 10,000 rupees. But in GST, this has been increased by 2.5 times, which is 25,000 rupees, a general penalty if no penalty is specified. The major impact or the major thing which you should be aware, the penalty for non-filing or late filing of the return in the current regime is 20,000 only. It is restricted to that maximum limit. But in case of GST, it can go up to 0.25% of the aggregate turnover, which can be huge depending on the turnover which you can have. So here we come close to this session. I hope that it was value of your time and attention. And if you require any kind of clarification or you need any help in GST implementation, so please feel free to get in touch with us. Our numbers are here. My contact details is also given, and we would be happy to help you. And we wish you all the best in your GST journey and GST implementation. Thank you so much.